We will now move on to the economy of genetic resources and the limitations and dangers. Klaus Basch is a professor in economy at Vienna University of Economics and Business in Austria. He holds a chair of public policy and governance. He has worked in a number of countries, including Norway, Norwegian University of Life Science at Ås, where he is professor too at the Department of International Environment and Development Studies. So we will now hear something about the connections between genetic values and economic values. Please, Klaus Basch.
I was told that there's not many economists in the audience. Are there any economists here at all? One. Okay, good, because I'm going to give you a little bit of an outline of some economics on the way. Basically, what I want to do is to give you a background, first of all, to show you how biological resources are being put into a market context. And I want to look at some, like I say, basic economics. I'm going to use the example of species provision. I've mostly worked on biodiversity issues rather than biotech. So I'll use this example, but you can apply it in other areas, and it's highly relevant to the last talk that was given. And then I'm going to look at economic values and put them into a more broader context in terms of the way that to understand economic values and what's being done with the assessment of benefits is about human behavior, ethics, psychology, and institutions. And it's far more complicated than is standardly talked about by orthodox economics and business. And then I'm going to give you some conclusions, or as I say, rather lots of questions which arise. First of all, so the background. Characterization of the problem, the policy problem. So what is the issue here? The issue seems to be that we're destroying and unintentionally losing valuable biological resources. That's why we have the Convention on Biodiversity. It's a problem. But at the same time, we've got something else going on in terms of the biotech saying that we're underexploiting certain types of biological resources so that we need to exploit some things more. Now, why is this problem there? This is the orthodox economic explanation in political economy. First of all, there's a lack of a market price. So we have a failure to include some measures of biological resources in our estimation. So when we're doing cost-benefit calculations, we implicitly are giving them a value of 0. That's what the economists would say, and therefore they have no weight at all. Private companies lack the right incentives. This is a link to that. So if the market signals are not there, what we find is that environmental pollution and destruction of the environment is a logical and profitable thing to do. We find that waste sinks are free and the potential benefits are outside the market. So what we've got is a case where private individuals can gain, or private companies can gain, by imposing risks on society. And politicians fail to take into account the right values, okay, whatever those might be. Now that means that they're ignoring things like natural capital, the concepts of natural capital, and in their forecasting and planning and assessing, they're going to get the policies wrong because they're not taking into account environmental degradation and the needed investment. So this is the story that is put forward, right? And what's the solution that we need for this? The supposed solution is that we incorporate the natural world into the banking and financing world, that we expand banking and finance so that it actually starts to make things more profitable. This is a range of recent reports from the World Bank, the United Nations, and so on. And there's also been the, as was mentioned, the T project supported by the United Nations, the economics of ecosystems and biodiversity. What's the thrust of these supposed solutions? Provide corporations and finances with business opportunities. That's the basic idea. And it's what's being called by the CEO of the World Bank as hardwiring biodiversity and ecosystem services into finance and banking. For example, extending carbon trading, expanding financial instruments to create biodiversity offset programs. And there's lots of money here. There's lots of money to be made for the financial sector. You know, for example, the current wetland markets in the US are estimated at 1.1 to 1.8 billion US dollars. And the other side of this is to show politicians how they can get economic growth from ecosystems and genetic resources. This means discussing things in terms of investment in natural capital, creating jobs, getting economic development as per usual, and tapping into the various opportunities that might be out there in terms of exploiting natural processes and genetic resources. So the thrust of this is for us to actually look at how we can get the economic model as per usual, operating in terms of exploiting biodiversity, ecosystems, and other natural resources. The thrust of why people buy into this argument, there are various reasons, and they're not all the same. For example, there's a whole buy-in by natural scientists and ecologists, which is based around what I would call pragmatism or political realism. This is the argument that basically this is the way that the world is structured. The world is structured around money and finance and banking. Those are the biggest institutions and corporations that are running the economy. And therefore, if you don't express your values in this way, you have no political footage. You have no way that you can make progress in protecting the natural world unless you express it in monetary terms. There is also the political and economic idealists' position, which is that this is the way we should be running things, that the free markets are the best way to run society, and this is based on a neoliberal political philosophy. It's something that people buy into if they're from the industrial sector, business leaders, and political leaders of various sorts. And then there's the economists who have an argument which is slightly different, which is scientific empiricism. I think is the easiest way to understand it, which is an argument that markets actually reflect a truth, a true value, and that in particular the people are expressing their true preferences through the market or through market institutions. And this is used by orthodox economists. Okay, so that's the background. Now I'm going to give you a quick, as the Americans would say, Econ 101, a short introduction to the economics behind this. So what I was going to do is take the example of species provision. Okay, so we've heard from the last speaker that species providers or other ecosystem services provide humans with utility or benefits, and we're interested in knowing what those are. So species per year, the number of species we have, and the certain value of those species. There's a benefit of species, and economists would call that in terms of a marginal benefit, and we can hypothesize what this type of function would be. In this case, what we have is on the left-hand side, when you've got very few species on the left-hand side, their value increases, because basically if we don't have any species, we're dead, right? So we might value ourselves and human existence highly, even infinitely. So it goes off the chart. At the other end, we can say at some point, species become redundant. How many small bacteria do we need? How many spiders? How many small plants? And so on and so forth. Lots of things out there that basically people don't value, and so in the economic argument, you could say they have zero value. We can simplify this just for the sake of me explaining the process by putting in a straight line. We can discuss, of course, what the function should look like. But if we keep with a straight line for now, then we have what is behind these economic benefits. They can be very broadly defined. It's not just direct use. It can be indirect use. It can be future options for use. It can be the value to future generations. And economists are even expanded into the existence of species. So what is the existence value? Then, of course, we have the costs, the other side of the equation. Species provision is costly. So we have a marginal cost function. The costs rise the more species you have. The reason they do that is because the cost includes opportunity costs. So if you think about it in terms of land use, you can say the more species, wild areas, and natural areas you have, the less land there is for human development, agriculture, forestry, agroforestry, and so on. So there's a cost involved in actually having species. What this means is that we get to a concept of optimal species provision, or we could call it optimal extinction, if you like. Because what we have is a situation where the marginal cost and the marginal benefit are going to be compared to each other, and of course certain species have no value or a low value compared to the cost of provision, and therefore we would go for an optimal point where we remove a lot of species from the world, which we can say is actually what we've been doing if we've been operating economically efficiently. Species are at the same time undervalued by markets. We've heard that the markets don't operate well enough to actually value things. So what happens there is we could say the marginal private benefits, the private amount of profit you could make or you could exploit or associate with the species we could describe as goods and services, is far less than the social benefit. So that there's a concept that there's a range of values that we associate with the natural world which aren't captured by private markets. This is then an argument by the economists that we need to actually have some assessment of the social and environmental values associated with species. If we have that situation, then what we can argue is that even though we've reduced down a number of species, we are still in a situation where we have an under-provision even in the optimal level. So the debate, therefore, in the mainstream economics is about increasing the number of species in this framework. What this means, in summary, is the orthodox economic logic says, without markets, if there are no markets, you have over-provision of the number of species, right? Because you aren't taking into account the costs of their provision. With markets, you get under-provision because the benefits are not taken fully into account. So what we need is markets with corrective measures. That means commodification of the environment as goods and services, but government intervention to capture values and correct prices, because the prices are wrong in the free market under this model. The private property rights then come in as being a favoured policy instrument, even when these things are described as public goods. For example, tradable permits markets, carbon markets, biodiversity markets, and so on. Public policy formation then ideally requires cost-benefit analysis, would be the conclusion, and a key role for economic valuation and market institutions. That's the end of your lecture for the day. Originally it was just the direct use, and it's now gone all the way through to this expression of existence values of an entity. And there's been an expansion of the applications. So starting out with straightforward recreation, what is the recreational value of an area, going through health, air and water quality, aesthetics, noise, agricultural material damages, culture and history being assessed, and now we're up to ecosystem services and biodiversity. In actual fact, we're beyond that even, because now we're talking about the value of carbon, and carbon is everywhere, right? So we're talking about the actual values of the constituents of the planet. When we look at how these methods are being applied, you can see in this diagram there's an increasing amount of uncertainty as a result of applications. What we have along the top is the types of methods that have been developed over time, over the last 40 years, and what we have down the side is the types of value category. And as you see, as you move, we're increasingly moving down towards these types of value categories such as ecosystems, functions, and biodiversity, and we're moving across from left to right in terms of our methods. We've moved into the realm where we have unclear types of values, unclear methods. We have methods which are of little or no use in terms of the application, and so we're into the realm now where the values are highly uncertain in terms of these applications and trying to push this method, even if you accept the economic orthodox approach. But what about that approach? What lies behind these values? The values in the economic approach are based on expressions of preferences, right? These are values as preferences. It's one particular type of valuation. It requires making nature into a human artifact for a start, objectification and commoditization. This is why you've seen the move towards those newer techniques such as contingent valuation and choice experiments, because what you have to do is get people to state their preferences. And that's the way that the economists are going about it, getting people to state their preferences. But even with all this development over 40 or 50 years, we've found that we still can't get the values, and therefore what's happening right now is there's something going on called benefit transfer, which means pick a number out of the air from anywhere you can and transfer it, regardless of time, space, or context, and apply that instead. So what we have at the end of this is lots of questions, I think. More questions than answers are coming out of this. Whose preferences count? What is the appropriate valuing population? Who should pay and why? Should compensation be paid to whom and why? What are the preferences of future generations? How should preferences be aggregated? What about preference weighting? Okay, a few questions. I haven't got time to go into those. I'll move straight on. An economic model for understanding environmental values would look something like this. You have revealed preferences, which is what you do when you buy something in the marketplace. You reveal your preferences by going out and buying things. Behind that is a stated preference. That is, you can state how much you're willing to pay or willing to accept for different changes in the environment. Behind that has to be a reason. Why are you buying these things? This is where economics get into murky area because it doesn't really have an explanation. It has a model of a rational agent, but it doesn't really even have a model underlying the rational agent. It has axioms, which are basically just saying this is the way things are. And then when we start doing stated preference work, we have to explain the results we get. And then you have to get hold of a bunch of socioeconomic factors. What is that? Age, sex, education, income, those sorts of things. Which ones should you include? Who knows? And then you have a bunch of institutional factors. The whole of this is framed in a certain context. Markets vary. Markets are institutions designed by human beings, and they are different. There's no such thing as a market. There's all sorts of different types of markets. So that's the economic model. The economic model is a particular type of model of human behavior. Let's compare it with just one other type, social psychology. In economics, we have an essentially static model where, based upon assumptions about the individual having pre-existing preferences and perfect information, you can predict what humans are going to do. But in social psychology, we have a process model which says that there's an emphasis on beliefs and attitudes and how they're formed and learned and how information is acquired. It's a very different type of approach, different model. In the social psychology model, human beings are fallible and complex. In the economic one, they're rational utility maximizers. How do these two meet? How do you integrate that information? I'll move on. The social psychologists have a different model. The social psychologist model emphasizes things like attitudes, subjective norms, perceived behavioral control. This is just one type of social psychology model. There are others, okay? But it's got a whole range of factors in there which are not taken into account by economists. There's also an issue that's not taken account of by the social psychologists, which is ethics, the philosophical basis of economic value, right? Ethics is not something that is an alternative to economics. Ethics is embedded in economics. The economic approach is one type of ethical system, and it has basically a whole range of issues that surround it. First of all, it claims that consequences are key. A good moral act is one which has good consequences. Trade-offs are normal. You can trade off everything. Trade off your mother, your grandmother, whoever. You can always trade things off. There's always a price on everything, right? The moral act has good consequences outweighing bad. You can trade off everything. Values arise from individual preferences. The value is how much an individual prefers a consequence. If you don't like it, if no one has a preference about it, you know, the species that are out there that no one really cares about, all those slimy small creatures, the snakes and so on, then they don't have a value. They may even have negative values. Choices reflect preferences. So when you observe choice, then you allow an inference that people have an underlying preference. Values are commensurable and can be aggregated. What this means is good and bad consequences can be added up. You can create harm. You can harm people as long as you can pay for it. It's fine. So the good and the bad can be weighed up, and then the best outcome is the net outcome, the net cost-benefit calculation. This is a very particular philosophical system. And there are other alternatives. For example, preference utilitarianism is only one type of utilitarianism. There are others, traditional Bentham utilitarianism, rule utilitarianism. Then there's alternative ethical systems than utilitarianism. There's deontology. We run a lot of things in our society on the basis of what is the right action. That's why we have legal systems. That's why we have constitutions. Then there is virtue ethics. What is it to lead a worthwhile life? What is a meaningful life? What's the life narrative that we want to tell? What does humanity want to have as its life story? So we could expand the economic model and make it a little bit more complicated. This is a model that can actually be applied with all these elements in terms of an empirical approach, where everything in this model can actually be measured or characterized, and it can be tested. Conclusions. 3 overarching concerns, I think, arise. These are all about our understanding. First, the meaning of environmental values, the process for addressing environmental values, and the framing of policy. Understanding environmental values, right? Some constituents of what it is, what makes up environmental values. We need to recognize that values cannot be reduced to a single figure, which is what's typically done with the monetary valuation. Understanding community is different from individualism. The economic model focuses on the individual. The individual is the focus of all values. Comprehending value without usefulness to humans is very important. There are values out there without human use involved or utility involved. Refusing to trade for money is not something which is irrational or abnormal, but that is the way it's quite often described in mainstream economics. It's perfectly rational and normal not to trade things. Importance of defending and not compromising principles is not included in the approach. Some implications. Values are not discovered, they are constructed. There's an institutional context through which we express our values. Markets are one institution which impacts on values. By imposing market institutions, you actually affect the types of values that are going to be coming out and reflected or perceived. And markets are highly diverse in themselves in both form and structure. So which market structure and form you choose is going to affect which values you get. The appropriate institutional process. What should we do here? What is the appropriate process whereby values should be expressed? We heard this morning about public versus private, but there's a lot more questions than public-private. There's markets versus politics, group versus individual, hypothetical markets versus actual markets. Should we have deliberation? Should it be instant deliberation? Should it be reflective? Whose process should be represented? Should the experts be involved? Should vested interests be involved? Should the public be involved? And how? Should we represent people statistically, like you do in a poll, a Murray poll, or that sort of thing? Or should they be represented politically? And what form of validity is required to legitimize a process? So how do we legitimize any particular process that we set up? And finally, framing the policy. What is the problem that we're actually dealing with? The problem characterization affects the type of solution that you're going to come up with. So what is the problem, and why is any given approach to what I call biopolicy, because I'm including biotechnology and biodiversity and other effects on biological resources here, what is it? What's the best way forward? Who supplies alternative visions? We're given a singular vision and a one approach, and we're told that this is the only way. So who supplies the alternatives? What room is there for contestation and value conflict? Because there's plenty of it out there. Where do non-utilitarian and non-economic values enter the picture? How we allow them to enter is extremely important. And what is the appropriate approach to biopolicy? Emphasis on human benefits under a narrow utilitarianism, that seems to be what we have. Markets as the best institutions, that seems to be what we have. Business and technology as the drivers for our future society, that seems to be what we have. How is nature and naturalness going to be protected in this? Are there limits to making the world into a human artifact? Because that's what we're doing. How do we account for strong uncertainty? We heard about ignorance this morning. There's also social indeterminacy. How do silent voices, the poor, future generations and non-humans, get a fair and just representation in the process?
Thank you very much. I think we'll open up for a few comments or questions, if anyone would like. Jan Helge Solbakk is quickly to volunteer. Please, wait for the microphone, please.
Just your last question on framing policy. I think your last question is extremely important. And that relates to the discussion we had this morning on intellectual property rights. The existing regimes are market-driven, or they are framed according to the laws of the market and of trade. And I think it is extremely important also in this field to start thinking in terms of how is it possible to develop intellectual property rights that are justice-driven and not market-driven.
I think we'll also have some comments on that very shortly, right? But please.
Yeah, I take that as a comment, so I agree.
More comments, questions? Okay, thank you very much.